we have the Doge father talking a lot about cryptocurrency, and that's Elon Musk, right? And he went on Saturday Night Live a couple weeks back, and ever since then, that Dogecoin has been dropping. I believe it was about 75 cents, and as of today, I think it was it was in the 30s, 33, 35 cents or so for Dogecoin. But let's talk about Bitcoin and Ethereum. I mean, this past week or so, we've seen some pretty big down days. I mean, Bitcoin has dropped about 53% from its highs. Ethereum down about 57% from its highs. So there's the crazy thing with some of these things, these cryptos, is there's tons and tons of volatility. You're seeing these moves, $10,000 moves sometimes in one day. Why do you think that's so different from the stock market? Why are we seeing such what's the word I'm looking for? Why do we see so much more volatility in the cryptos compared to the stocks? But how can we capitalize on that as well?
Yeah, well, with stocks, with companies, you can kind of look at there's an intrinsic value there. There's something you can base the value on. And crypto, you really can't. Most of it is hype. It's hype and hope. I guess that combination. The movement oftentimes just comes from a comment by somebody, by one or two people. If you go back a century, the stock market has been clearly the best wealth creating vehicle that there is, more so than real estate, more so than gold. But crypto kind of took over here recently. And you know what, the number one, it's probably the number one returning investment in the world is Doge. It's up 22,000% in 12 months.
That's unheard of.
22,000%. So when people see that kind of movement, we talk about the herding effect, the herding impact, and that is where people like to follow other people. And when they see people doing well and they see people making money, they jump in, and you can't blame them when they see people that are putting, maybe $1,000 or less into something and becoming a millionaire. Well, then a lot of people jump in thinking that they're going to be able to do the same thing. But what they have
that's what social media shows all the time. Always the crazy stuff like that.
Yeah. But what's going to continue driving the price up is in most or great part is just continued hype by the people that want to drive it up.
Yeah.
But we've seen now the volatility that's involved in these stocks. As you talked about Bitcoin. Well, it went from 65,000 down just in this last week down to 30,000, then back up to maybe around 38,000, somewhere around there.
Yeah, it's almost about 40 right now.
Yeah. I mean, that's a big move from 64,000 to 40.
Yeah.
And it's not the first time that has happened. So, and then the other thing is that are there only, like 5 or 6 altcoins in existence?
There's a bunch of them.
There's thousands of them. There's thousands of them. So, how do you choose which one? And then every so often a new one comes along, and that's going to be the Doge killer. And people pump money into that. But the speculation there is so great. The hype is great. It's very much like the dot-com bubble back in 1999. And the number one, the most valuable company in the world at one point in time back then was Cisco. Yeah. And Cisco, they've had continued great earnings, but their price is now below where it was in 1999 and 2000. So and same thing happened to Intel. Their price is below where it was in 2000. So if you're doing the buy and hold strategy with stock, sometimes that doesn't work. With cryptocurrency, I guess it remains to be seen what the proper strategy is there, but it's something that we know is going to be around in some form. It's going to be the future.
Yeah. Well, the great thing too with the cryptos is it does have that movement, but the public just doesn't have the proper rules and tools to make those decisions when things are going down like that because they panic.
Correct.
They panic and sell, and that's probably what had happened is there was so much panic selling, and actually Coinbase and Binance were down, was it Wednesday morning? Because of all
shut down,
the sellers.
Not down in price, but shut down.
Yeah, down. They were shut down because they couldn't handle all the transactions. So you have to do that with more confidence, but have the proper rules and have the proper tools to do that without emotions too. And you hit the nail on the head. It's 100% speculation and 100% hype. So once you have those tools and making proper decisions, utilize the price chart or supply and demand to make those decisions, and not listening to the Elon Musk, the Doe's father, and all these people pumping it up because they're sometimes what they call it pump and dump.
That's right. Yeah.
And with the cryptos, we had Coinbase that they IPO'd back in April, right? And it opened up at about 378, shot up to around 430 almost. Today, as of today, it's only sitting at 233.
Yep.
So it's amazing that, there's a lot of people, and I talked about this on one of the podcasts I was doing with one of our instructors, Scott, and he was talking about the type of IPO that they did with Coinbase was the early investors, they actually can sell their shares right away. A lot of times there's a lockup period and you cannot sell your shares. So what could potentially be happening here with Coinbase is people, they knew it was going to open up much higher than expected. And they knew it was going to go up a little bit. So I think what they did was they probably just sold their shares with it. They took their money and ran. Do you think the crypto market has any effect on Coinbase?
Well, absolutely. Yeah, I would say pretty much 100%.
But with the price though, because why do you think the crypto market, the price of, let's say, Bitcoin, why would that affect a stock though?
Well, because that's what they deal in. The Coinbase is a platform where people can buy and sell Bitcoin.
So when you're utilizing the cryptocurrency market and you trade stocks, that might be a correlation you could use together.
Right.
So if someone is trading Coinbase, they might be able to make decisions based on what Bitcoin is doing or vice versa.
Right. Yeah, and there are ways of participating in that market without actually owning any of the cryptocurrencies. By investing in Coinbase is one. What about PayPal?
Yeah.
PayPal, huge in that industry. Square, same thing. So you don't necessarily have to be in the cryptocurrency ownership business, but you can still participate in the movement of the Bitcoin and the other coins.
Yeah, and that's the great thing about using multiple assets together is there's correlations, there's inverse correlations, much like using stocks with currencies or stocks with the futures market. There's correlations, but I think you talked about earlier. That's how you are more diversified, because that's probably the most important thing, especially in portfolios, is being diversified. Some people have stocks, some people have bonds, which I'll open up a can of worms. I want to talk about bonds coming up next with the 30-year bond plus the yield. Well, you talked about interest rates potentially, they could be raising them. Why is that happening? But you really dive into a lot of correlations when you teach these investing classes, correlations between stocks and other markets, and how to make decisions based on facts, not speculation or not the hype, right? Because so many people are making those decisions with emotions and they don't have a proper plan. You actually talk about having a proper plan, rules and tools within those plans. So Al, coming up next, I want to talk about those bonds. We have a lot of investors that are in stocks and bonds, and they want to understand how to use those properly, especially with interest rates, what's happening there. I want to talk a little bit about the 10-year yield as well, how that could be impacting the stock market. This is Josh and Al, Investing with Confidence. We will be right back.